Alright, so in this video we're going to get into anticipational order flow and exactly what it is. I think it's really an important aspect to know and learn in the way that we trade, and I do look at it a little bit different to other people in respect that you should be always anticipating and reacting rather than expecting and sort of predicting. Now I do go into this video on the charts in a few minutes, so let's just go quickly through the basics into anticipational order flow and we'll take it from there. So anticipation order flow is what we are basically always looking for in the markets. So what is it? Well, if we are looking at a price chart, we would have some form of anticipation that we want to see a trending market. So if we're seeing trending markets, it's obviously a great thing, as opposed to ranging markets. We can still trade either or, but trending markets is where we can make some big trades and some really big percentages for the longer term. Okay, so if we're looking at bullish order flow or bullish anticipational order flow for this example, so if price forms a high and a low, so as you can see from the diagram, we have a high and a low, which this is the pullback. So once price pushed up, formed a high, we pull back, that's the pullback, and we have a low. But this low is not confirmed until we actually get a break above the most recent high, which will be here. So what we would be anticipating for a bullish order flow is for this high to be taken out, and once that high gets taken out, that forms a higher high. So you can see this is the new higher high because it broke above this, so it's a break of structure and it's also higher than the most recent high. So we have a high, low. The anticipational order flow would be for a new higher high and for price to then confirm this to be the higher low. So once price breaks the high, closes above, we have a confirmed higher high, and more importantly, we have a confirmed higher low. So this low wasn't confirmed until price broke. Okay, so what's next once price breaks that high? Well, if bullish order flow is to be continued, the anticipation would be for a pullback, a tap into the order block or the higher low region, and for price to not surpass this level. If our bullish order flow is going to continue, this level should not be broken. And when I say that, it can be broken, but it depends what price is breaking into. So did we form equal lows, or did we form trend line liquidity on lower time frames? Any form of liquidity around this area, if price comes in to sweep below the low or the higher low and sweeps liquidity, or if price taps into an unmitigated demand. So if we're looking at this area here and price comes in to break the higher low, but it comes into this area which is unmitigated, just for an example, then that would not be classed as the order flow to the upside stopping. Basically it's continuing. So when we're looking at unmitigated areas and liquidity, then price can break the most recent higher low and our bullish order flow can still continue to the upside. And I will get into that on the charts, where we can, how do we determine when order flow has changed and the trend momentum is now shifted to the downside. So I will show you some examples of that. But if we continue, we have a higher high, higher low. The anticipation would be for a pullback into this region, bullish order block, mitigation, and we aren't really looking for price to go lower than this area. As I said, it might come down, seek liquidity, or tap into an unmitigated area, and it might also come down to form equal lows, wick below, but that's not considered, depending on how price is delivered, that's not considered a breach of that higher low. Okay, so this is where we can look for entries, and we can also trade short into, trade this pullback into the higher time frame, higher low. Okay, so if we continue, we have the next move. So if our anticipation or order flow is going to continue, this is the most recent higher high that we want to see breached, and you can see price breaks above the higher high, we form a new higher high. Now this higher low is only confirmed to be the higher low once price puts in that new higher high. So once we get this, we can then work backwards with these candles and come to find the lowest point before we can see the pullback. So the lowest point we can see is here, bullish order block, and notice how this is higher than the previous higher low. Okay, they get higher because if price is breaking these higher lows, then you know, bullish order flow is coming to an end, and we can potentially look for selling opportunities depending on how price reacts afterwards. Okay, and then higher high, higher low, we pull back, and we then, this is not confirmed until this then puts in a higher high, then we have a confirmed higher low, and then I'm sure you get the message by now, we get a pullback, higher high, higher low. Okay, so this is obviously very textbook. Charts don't look like this, but this is just showing you, you know, what our anticipation or order flow is. And the reason why I say anticipation, not expectation, is I do go into this on the charts, but it's basically because having an ego in trading is one of the worst things you can do, because it's just going to hold you back, and you're not going to see any sort of consistency if you bring ego into trading. Okay, we want to be always anticipating, reacting, not predicting and not expecting, because once you, I'm sure like you can agree with this, like if you're, the moment you start expecting something to happen, the opposite happens. Like it's just a way of life really. Like if you're anticipating and reacting, you'll be more at peace with the outcome, and it won't actually affect you. You just react, and then you just trade based off your plan. Okay, so that being said, I now want to get into the charts and go into this on the charts in a lot more detail, so you can understand, you know, anticipation or order flow and how we view it. So now we're on the charts. What I'm going to do is go through EU on the hourly time frame, and we talk about, you know, anticipation, order flow, and basically the turning points in the market, the lower lows, lower highs, higher highs and higher lows, and talk on, yeah, what we would be anticipating for, you know, future price. And we're going to start from here, and then we're going to go through a bit of price, and, you know, we go through some examples and take it from there. So if we start on this side here, what we can see is we have price that's pushed down, and we had a counter trend candle inside bar here. But if we're looking at the swing points, you can see this is one leg down, and the next sort of most visible pullback would be here, and then price then puts in a new lower low. Okay, now at this point here, the anticipation that we would be, you know, looking for, seeking, would be lower low. We have a range which is also the lower high. We have an order block here, and the anticipation would be for price to come into this area and mitigate this move, and then anticipate a new lower low. And you can see we got it here, and we did wick. We didn't really close below. Okay, we did fairly close below, ever so slightly, and then we pull back and we put in a lower low again. Okay, so this is a clear bearish order flow, and it's quite efficient pricing as well. You can see once we've broken structure, we've come back in to mitigate this fair value candle, the imbalance and the order block, mitigation, range, a little move down here, pull back, mitigation, break of structure, which would be the most visible break of structure is this move here, because this candle has broken impulsively, left imbalance. We have the last up close candle, which would be here, which we could refine to the next candle. And what I can do is bring this up here, mark that on. So this is the order block. We can refine it to that candle. Okay, so at this point here, I think it'd be better if I can draw it on for you. So we have a lower low. Okay, make that a bit darker. We have a lower low, and the swing point, you know, it's a bit subjective. Is it up here? Or for me, the swing point would be up here, but you know, obviously what we can do is look at our order blocks and where price is likely going to react from, or where it's going to need to come back to mitigate before continuing. You can see if I just delete that off, what we had was, get my fib and bring it down. You can see we've got a mitigation to the 50% EQ, and you know, obviously we can look for entries within here. And if we're not getting involved with this move, we have sub 15-minute structure breaks we can look for into the new lower low. So at this point here, what we have is swing point, so a lower high, lower low, and what do we have next? Pullback, which we know as a corrective mitigation of these orders within inside this order block, and we can sort of agree that the highest point, the highest swing point before price push down is clearly this candle here. Okay, so if this bearish order flow is going to continue, what do we need to see? Well, we need to see price break this lower low and stay below the most recent lower high, which is here. If price, say, pulls back to here, fails to put in a new lower low, and we actually break structure to the upside above the lower high, then we have signs. It's not confirmed of a trend change or a shift in momentum, because it's all dependent on what price is tapping into. We would need to see a break above that, a pullback, and then a second break of structure. That would give us a really good indication that we're now going to see some bullish price action and order flow. Okay, so if we continue, you can see the move that broke structure or broke this lower low is this candle here. Okay, and we can see we have a price puts in a lower low, we pull back ever so slightly, but really the swing point would be here. And we don't get me wrong, if we're looking more into each candle, we do have breaks of structure within this, which we can look at as potential entries for us to get long. Because if we are looking at this, what we have is, this is one whole move, but within it we have a break of structure here, and we have the last up close candle, or a little range inside bar, which price comes in to mitigate. But what we can also see is, you know, a lower low and really a lower high up here. Then we sort of range within this wick, and then we push down with these two candles, put in a new lower low, so we have a lower high here. Okay, and then what we can then see is price broke. Okay, so let me just delete this for now, because these are the swing points, but as I just said, we have an area within here that which price has broken and put in a new lower low here. So what we can see is price has broken structure. So break of structure, as you can see, above that lower high. And what do we have before that? So we have a 1, 2, 3 candles. So we have a consolidation range, which price does come into, but you know, barely. So this would be, you know, a change in trend, which we can look to get along from. Although what I just said before, where if we've got an area of supply which was previously, you know, left unmitigated, then this could be a seek of liquidity from the most recent lower high, and then a mitigation of this supply to go short or to go lower. But as you can see, we have some, you know, it's very efficient pricing. We don't really have any areas where we would really be looking at to get short from, and we can identify this as quite a momentous break above the lower high. Okay, so what we have basically is a consolidation range, initiation out, break of structure, and price pulls back. We do break again, but it's about how it breaks. And what I would be looking at that would be just sort of a feel of that imbalance. So from that wick to that wick, you can see we filled that to rebalance, and we didn't really break with momentum as opposed to this move here. Now, if we was to drop down to a lower time frame, we would also see equal lows. Okay, so we've had a clear of equals, or a sweep of equal lows, 1, 2, 3. You know, a lot of liquidity building at this area from people stacking on buy orders. Price seeks liquidity, taps into this area, mitigates, and then that's why we then see price continue. Okay, so if we continue with price, you can see we then mitigate entries within here, and if we aren't getting involved here, we have a break of structure which would be more visible on a 15-minute time frame, and then we tap in and we mitigate, and then we continue again. Now this is what I was saying about a true sort of confirmation of the trend change. We have one break of structure, mitigate, and then we break structure again. Okay, so we're signaling that price really wants to go up from here, and price is efficient, and you know, we break structure again. We have a wick here that price comes into, but no real sort of clear entries that I would be looking at from here. But we can see we've now changed our order flow, and you know, previously here we was in a downtrend, putting in lower lows, lower highs, and then we broke structure to the upside, mitigate supply to the left, mitigate demand, and you can see this low here, price come in and it failed to put in a new lower low, and instead we broke structure to the upside, and this shows us intent for higher prices because prices failed to go lower. Okay, and then instead we've broken structure to the upside. Okay, so we're now changing our anticipation order flow to the upside, and you can see this is what we have next. So carrying on, break of structure, pull back. So the swing points at this point would be that as the high, and the swing point down here as the low. Okay, so these are the swing points. We have entries within here that we could look at, but we now have the anticipation that price is going to potentially, doesn't need to, but take out this and put in a new higher high, and you can see we have that here. Okay, a new higher high, and then where's the most recent swing point? Well, it's clearly the lowest point, which is here. This is the most recent higher low because it's the lowest point before we see the pullback. So price pulled back. This is the lowest it came before it broke the higher high. Okay, so I hope that makes sense. And this may seem a bit basic to more of the advanced traders, but you know, these are the concepts that are really important. So carrying on, we have the most recent higher high, higher low, and you can see anticipation order flow continues. We have that as a higher high, and the lowest point, which would be higher low at that wick. We have entries within here that we can refine. You know, valid order block, price does not come back into, which we always know price doesn't need to mitigate every single order block. That can be used for, you know, a later date. Okay, so carrying on, higher high, higher low, price pulls back, little range, and then we have a new higher high. So we can definitely class that as a pullback because price has stalled and then moved up again, right? And then we have that as a new higher low. Price does come down to test it, and you could argue that's broken it, but it's always about how it breaks, and we can see it hasn't, you know, if anything, it's just sort of equaled the low, built liquidity in the form of equal lows. So we can see We do have equal lows there. And then what do we get next? This is the highest point. Price then puts in a new higher high, and we have the new higher low. And what we can also see is that's a valid order block, which we would be definitely, if I can get that, definitely be looking for entries within that. And although it hasn't broken with huge momentum, this candle has. And you know, these two candles, you know, it's showing some momentum. We do have liquidity sitting below, but it doesn't need to be swept right away, as we already know. Okay, so although we do range around for the next few days, or 2-3 days, we are still within this higher high and higher low price break structure. We come in to mitigate entries on a lower time frame within here, as we know with the strategy that we trade. And we could be looking for entries within here as well, because although it's not a break of the hourly higher high, that is a break of substructure on the lower time frames. Okay, so even the 15-minute, that's a break of structure from that high. We come back in to mitigate that move in these wicks here, and then price pushes off. And really we have the exact same thing on this move here. We push off and we come back in to mitigate with that wick, that last down close candle. So I can just mark that on for you. We can refine it to that candle. Okay, and that's why price is doing this. It's coming in to mitigate. Okay, but then we can see we've now broken our higher high. So bullish order flow, and our anticipation should be still bullish. That's the new higher high. Or that's not really a pullback. So we could be, although I keep saying that there is substructure breaks within here, it's not really a clear swing point. So we would be looking up here. Okay, so we can see a clear pullback, and then we broke structure again. Okay, so that would be the new higher high. And where are we? Yeah, and that's the new higher low. Okay, continuing on, we have a high high, pullback, so higher low, higher high, and we can move that up to there. And we do become a bit messy. We range around a little bit, and what I see this as, well, this is exactly what it is. We have equal lows, as you can see. So we have sweep of equals. So SOE means sweep of equals. So basically equal lows. So people are looking at this as a double bottom. Retail methods, we have one, price pushes off, comes back to it, people are getting long, we see a reaction from this, people in long. What does price do? Comes down, takes them out with that move there, and then that is exactly why momentum kicked in. That then led to a break of structure. So when we can utilize liquidity and our sort of market structure and order flow, this move here isn't really although it is a break of the most recent higher low, which is here, it's seeking liquidity from the equal lows. So we're not really looking at this as a trend change. It's more of seeking liquidity that's going to fuel price to move even further. As you can see, this is what it does. Momentum kicked in because price now has a reason to do so. Okay, so, and I did say this is the most recent higher high, but we did wick it here, but we didn't close above. Okay, so if we just continue with our bullish order flow, you can see once price comes in, it does break it, but as I just said, utilizing liquidity, we can identify that as just a fake out basically, and seeking liquidity. Okay, and then we have higher high, and then higher low. Price pulls back, higher high, and we can see higher low. So higher high, higher low, higher high, higher low. and then we range around a little bit, and then we do break. So this is where it can get a bit confusing, where you're thinking, is this move here, can we now get short from this area here? When we need to be looking at the overall picture. We have this candle that price is going to try and gravitate back to, because it is a fair value gap, and a lot of liquidity in this candle. And as I'm always saying, price tends to do this where it will mitigate large candles by the 50%, so the EQ range, as you can see, it did. And what we also have is, although it ain't perfect equal lows, it is still liquidity from these lows here, okay, and a mitigation of the EQ from this. And as I was saying before, when price is pushing up like this and we have liquidity building, if price comes in to break, is it really a trend change, or is it just mitigating something left before continuing higher? If it's going to be a trend change, what we want to see really is that structure break, pull back, and then a second break, and then we can sort of switch our bias and look for bearish order flow and change our sort of anticipation. But you can see that's not what we got in this example. We just sort of come in to mitigate, and that's why this supply didn't really hold. It reacted as it always does, and then it pushed up higher, and then basically price come in. It actually came a bit lower into this candle, took liquidity from that low, and then continued up. Okay, so if we just continue knowing that this is a play on liquidity and to try and rebalance price from previous price, we can continue with our bullish order flow and look for price breaking above this area. And you can see we got it here, and we have a higher high, higher low, and what we can see is this move that led to the swing point being broken from here created a valid order block, which can be refined on a lower time frame. We have entries within here, which probably would have led to a little bit of profit because price did come in lower, which, looking at this from my experience, is probably, if we're looking at refining this on a 15-minute, it's probably somewhere, just guessing, probably half of the hourly candle, or even 3/4. And you can see that's what, more than likely, that's what price come lower for, to actually mitigate that refined OB and the fair value gap. Okay, and of course taking liquidity from that low as well. Okay, so that's why price done that. But then if we're looking at this, we have a higher high because we did pull back, and a higher low. We do break, we pull back, we come into the last up close candle, and we break structure again. But remember, it's so important on how it breaks and what is price breaking into. In this example, we can see price is breaking into demand, and an unmitigated demand zone with liquidity at that low as well. So with that said, once price broke structure, we can still look for entries here, definitely, and we can getting involved in entries here. We can target this, it's very obvious, we can target this unmitigated demand zone. Okay, and then we targets would have been met, price reacted, we broke structure, which is it is substructure, we've broken, and then price mitigates that down candle. And really we have the exact same thing here. So if we're looking at this as a break of structure, if we're looking at the last down close candle refined to this candle, although we do tap into it, we don't fully mitigate, and then price reacts. But this is why price come lower, because it mitigated to the EQ and all of it basically, and that's also taking liquidity from that low and then pushing up from here. And we can also see we have, this is definitely news related, but news is just sort of covering it's a reason for them to move the market. We have the exact same thing: breaker structure, last down close, refined, and we could also refine to the wick because that is a order block on a lower time frame. Price comes in to mitigate, and this is the move that put in the new higher high. I'm going to say it's here because this is just a little pullback. Although it is a pullback, it's not really, the swing point for me is the highest point. So that's the higher high, and we have the higher low. And what price does next is, again, we have, although this is a little pullback, it is still structure in a way. Price breaks it with this candle, last up close candle, we mitigate, we break structure again, last up close candle, we mitigate. These are entries that we can take and target these lows as, the bare minimum. Okay, but then we can see our order flow, our bullish order flow comes to an end, and we actually break momentously. We break down and we break below the most recent higher low. So we have a swing point down here, and we do have a pullback, which is classed as a swing point for me. And what we also have is the last up close candle, which price barely misses. So you can see it doesn't really come back into it. This candle here would be an area on the 15-minute time frame because of how the candle is with wicks each side. So we can still look for areas, within here to look for shorts, and then first target being the swing point. Price takes it out, and we then just put this on. So we broke bullish order flow, we put in a lower low, and this lower high is confirmed when we get a new lower low. Okay, so we've broken that lower low there, and this is now confirmed as the lower high swing point. And we pull back. This is not confirmed yet until we break the lower low. We do that here. We pull back, and what does price fail to do? It fails to put in a new lower low, and instead pulls off, then breaks structure. This is also intent for higher prices. And then where's the most recent swing point in this market? It's up here, or it could be here, because lower low, lower high, lower low, lower high, lower low. Yeah, so it is here. This move, price breaks it, and then we have pull back and we break structure again. So we have another change in our anticipation order flow. So we would then be looking for bullish price action. But if we get into this bit of price here, what we can see is we have a bullish candle, which would be that one, which price doesn't come back into, and we then break structure, and we have this as our last up close candle, which again we don't really come back into, but there is entries on a lower time frame because this is just a little range, so we can look for entries, which would have been a little profit, and then price fails to put in a new lower low, and instead we then break structure to the upside, and we pull back. So if we just continue from here, all we can see is we have a high, and we have a low here. We pull back, we range around, we break structure again, high, high, and lowest point, higher low. We break structure, again we have a news which just basically fueled price to come down to mitigate, and then it basically, once price mitigated to the EQ, it can then actually move up. Okay, so we can see, although we have a counter trend candle, the swing point would be up here, and that higher low would then be there with a little inside bar within that, and then we get some liquidity building. So what we can see from this bit here, we have equal highs, sweep of equals, and you can see we swept it there only slightly, but we did sweep the equal highs and took liquidity. Okay, so higher high, higher low, that's not a confirmed higher high. And then price does range, build liquidity, breaks down, which this move down here is definitely a sub break of structure because we are within the swing points, but we can still look for entries within that break structure. But bearing in mind, we would be having this marked out as equal highs, so we are anticipating that price will manipulate the highs before selling off. Okay, so if we continue this move down, we break structure, and this, you know, it's quite messy, and we do basically come down. This is the lowest point, and we just wick the most recent swing point and higher low. We wick it with that candle there, and although that this was news, price did come back in to fill this candle, and I wouldn't necessarily be looking for entries within that, but you know, there is entries you can take, but I'd be looking for something more clean and just waiting for better price action. So if we continue on, we have this bit of price action here, which is within the swing points, so the higher high and higher low, which we did wick up here and this side. So we wicked it either side, but we are still within these swing points, but we can still look for breaks of structure within it because, you know, there's still a lot of opportunity involved with this. So this bit of price action here is something that I took a few months ago, which I did forecast. So what we do have is we have a break of structure. Okay, so we put in a high. Now bearing in mind, these are structure breaks within the swing points, as I've just mentioned, but we can still trade it because, you know, there is still opportunity within here. So what we can see, and I did forecast this quite a while back, but we have higher high, higher low, higher high, higher low. This is the move that broke structure to put in a new higher high, and we do have two areas where we can look for longs, that area and this candle here, which is the one I took on the 15-minute time frame, and this led to a really big trade, I think like 50 plus R. So we got involved in entries here and managing on higher time frames to that very first target being here. But then you can see we actually, before we broke this high, we ranged around for 4 or 5 hours, and then we really broke with momentum, which also for me is grabbing more liquidity from these equal highs, because this probably didn't shake out enough sort of stop losses or orders, and that's why price pushed up quite momentously. And yeah, that was the bit of price I wanted to go through, talking on, you know, anticipation order flow, and understanding that the reason why I don't call it expectational order flow, I know I did mention this already, is because expecting something to happen is the wrong mindset, especially in trading, because once you start to expect something, more times than not, it's not going to play out how you expected. But if you anticipate and react, I think you'll be a lot more at ease with, you know, what the markets do. And if it plays out in your favor, then it's great. But if it doesn't, you're not sort of hurt and thinking, but I expected that to happen, so why didn't it happen? You just sort of you're more at peace with it, and you just react to the market. So I think it's really important to anticipate, react, and not predict or expect.